Hello, One Talk. Welcome to the Unicorn Emprise podcast, the podcast for PNG entrepreneurs earning between 0 to 1 million plus kina in revenue to gain financial clarity, build business structure, and become tax confident. I'm your host, Vanessa Gaeta, a registered public accountant, CPA, and content creator from Papua New Guinea, with 15 plus years of professional tax and accounting experience. I now run my own accounting business called Hello Taxman, 100% online from my home in Port Moresby, where I live with my husband and 2 young kids. In this episode, we're tackling a topic that's quite a mystery to almost every single startup founder and small to medium business owner that I've met in the past 7 years. Choosing the right tax structure for your business. This episode is inspired by my YouTube subscriber, Terry, who took the time to email me 5 questions around tax structure in entrepreneurship. Thank you, Terry. We will address your questions in this episode to demystify taxes for our Entrepreneur One Talks. So for you, my listener, whether you just registered a local company or you're thinking about operating as a sole trader or you're wondering if you made the right choice, this episode is for you. We're diving into the 5 essential questions about PNG's tax regimes, including the standard company tax and the newer small business tax regime and what happens when you're just getting started. But before we dive in, here's my disclaimer. I am a registered public accountant and CPA in PNG, but this podcast is for general educational and informational purposes only. It is not personalized tax, legal, or financial advice. Tax laws and regulations in PNG can be complex and subject to change, and every business situation is unique. So, please consult with a qualified tax professional or accountant who can assess your specific circumstances before making any business or tax decisions. By listening to this episode, you acknowledge that you are responsible for your own compliance and business choices. Now that is said, settle in so we can start playing the tax game together. Let's kick off with the first question that many new company directors ask, and that is one that Terry has asked. What are the initial tax obligations for a local company? What are your tax obligations before you even start to operate to make money? Now, that's a great question. And here's the deal. Once you register a local company with the IPA, Investment Promotions Authority, you are automatically on the radar of the IRC. Okay? Just because you registered with the IPA doesn't mean you are not liable for taxes until you get your TIN from IRC. I've seen some people who believe that way, but there is a reason why the IRC will always ask for your IPA certification when you apply for your TIN, because tax reporting starts from the registration date with the IPA. Even if you haven't started full-on operations, you are still required to lodge a specific tax return form annually. There are 5 of them. For the company, it is called the Form C. The C stands for Corporate or Company Income Tax Return. There are those 4 other annual tax return forms specific to your business structure, so you need to make sure that you fill the correct one for your setup. Now listen carefully. This annual tax return form is required to be lodged even if you haven't earned any income yet in one financial or calendar year. Also, this is the most important one that so many miss out on. If you did spend some money getting set up in preparation to earn money, that needs to be accounted for. Doing that bookkeeping starting from the IPA registration date will give you so much financial clarity and, even more importantly, may lead to legally reducing the amount of taxes you have to pay when you finally do earn income. And that is why bookkeeping is so crucial in business. That business function is necessary in order for you to complete and file the annual tax return form, which tells the IRC, hey, I exist, but I haven't made any taxable income this year. Most times, you don't pay tax on nothing, but you do need to file that tax return. So mark your calendar right now. Mark it. Pause this podcast And mark your calendar that if you have registered a local company, the annual tax returns are due by February 28th in the following year. Right now, at the time of this recording, it's November 2025. So that means your 2025 tax return that you'll be reporting the activities that you did from 1 Jan to 31 December 2025, that needs to get into that tax return form and lodged with the IRC by next year, February 28, 2026. Okay? So don't wait until you're making sales and making a profit to engage with the IRC. File your tax return on time, even if it is nil or a loss tax return, and stay compliant from the start. Now let's move on to question number 2. Terry asked, how does the 30% standard company income tax compare with the small business tax or SBT regime in terms of tax benefits or savings for small and micro enterprises? Such a good, juicy question. And I am just going to go straight into the comparison. The SBT is more of a fee rather than a tax rate. It is a simpler tax return form to fill, but there are no allowable tax deductions. For example, if you earn 0 kina, you pay 250 kina fixed tax in the micro bracket or category of the SBT. On the other hand, the 30% company tax rate for local companies is a higher tax rate. The tax form is much more complex. Accounting is required, like accrual accounting, proper accounting. And the biggest tax benefit is that it allows for tax deductions and losses carried forward. This is the normal and the most basic tax benefit in entrepreneurship for any business size. So, for example, if you're earning 0 kina, there's 0 tax to pay because you didn't earn any income. So no income tax is paid compared to SBT. And if you spend more than you earn, you could have the tax benefit of legally reducing taxes in the current and future years. But there are processes, okay? This tax regime requires you to have the value called accountability, and you're going to have it on a daily basis, okay? It's not a one-off thing at the end of the year. This is an ongoing lifestyle. So the key takeaway here is if you're tiny and you want simplicity at the start, the small business tax regime is the king, but it has conditions of entry, okay? There's specific types of sole traders. This was made more for the semi-informal earners in our economy. On the other hand, if you are serious about entrepreneurship as a career, you are going to be equipping yourself to play the company tax game. And on to question number 3. Terry asked that given that I've registered a local limited company first, have I missed out on any tax incentives or simplified compliance provisions that would otherwise be available under the Business Name Act or for sole traders operating under SBT? So this one is kind of like the question number 2. So when you register a local company, you can't be under the SBT regime. You're under the normal income tax regime. And as we said, the SBT regime is really only for the semi-informal sole traders. And that means you won't get the simple tax return form or the fixed tax fee under the SBT. But on the other side, being a local company opens other doors. So like I said in the previous question, you can legally reduce the amount of tax you'd have to pay via these allowable tax deductions. Okay, you can carry forward tax losses to offset future profits, and you would have a clearer separation between your personal and business assets. So you didn't really miss out. It's more of a strategic choice because companies have different advantages. Just make sure that you are leveraging them properly with good record keeping bookkeeping, accounting, and tax planning. Okay, and question number 4 is, should I register a business name under my company? Will it unlock any tax benefits? In short, no. It won't change your tax position. The tax obligations flow from the legal structure. Okay, so if you register Terry's Tax Solutions as a business name under Terry Investment Limited, you're still taxed as a company at 30%. There is no dual structure tax advantage here. This is more of a branding kind of thing. So you got your legal company name and then you got a brand in front of it. Like my legal company name is Unicorn Emprise Limited and the brand name is Hello Taxman. There's no advantage here. It is just a purely strategic branding thing. And I still get taxed at 30%. And this leads us on to the final question. Are there any exemptions, thresholds, or concessions under IRC or the Companies Act that apply to SMEs structured as limited companies, particularly for the startup phase of business? Okay, now there are very technical definitions for words such as tax exemption, tax concessions, that kind of thing. But what I'm getting from this question is that Terry and you want to know what tax advantages SMEs have at the startup phase as a local company. Now, I highly recommend you listen to episode number 5, Who Tax Law Really Loves, because I cover the most basic tax advantage in entrepreneurship, which is this ability to significantly and legally reduce taxes via allowable tax deductions. This is something you cannot do as an employee. I'm going to drop the link to that episode in the description box. So make sure you go there to click on it and listen, because it is the most basic tax benefit in life itself. You need to understand how closely proper professional bookkeeping in its true sense is tied to your ability to legally reduce taxes in business at the startup phase and into the rest of your life as a business owner. Okay, this is why accounting is core in business operations. If your company is in its startup phase and not yet profitable, you won't owe tax. But remember, you still need to file or lodge prescribed paperwork. You will still need to do the proper documentation required to reduce taxes legally. So the key here is to work with a qualified accountant or a tax advisor who understands the practicalities of the PNG tax laws. There are opportunities, but they do require proactive planning and proper documentation. So the key takeaway here is that tax advantages exist, but they're not one size fits all. If you are serious about entrepreneurship as a career, you would factor into your business strategy to collaborate with accounting and tax professionals to make sure that you are legally reducing taxes in business and thus reinvesting your profits into your business operations. Okay, Wantok, and that's all in this episode. We have covered initial tax obligations, the differences between company tax and the new SBT or small business tax. We have also covered whether you missed out by incorporating a local company early and the role of a business name, and finally, the mystery world of tax advantages in the startup phase of formal SMEs or small medium enterprises. Here's the big picture, okay? What you do about tax compliance boils down to the purpose of your business. The real deep soul purpose of you making money shows in the decisions that you make around tax education and financial literacy in entrepreneurship. So keep learning and keep building to become tax confident. Okay, One Talk. Until next time, I'm your host, Vanessa Gator. Join me again next fortnight on the Unicorn Emprise podcast.